If I told you there's a company in America trying to completely change the way people buy and sell homes, a company that promises instant cash offers, zero hassle, and a process so easy that it almost feels unreal, would you believe me? And what if I told you that this same company's stock has been swinging like a roller coaster? Some investors think it's the next big opportunity, while others think it could collapse at any moment. Before you scroll away, you need to hear this, because the company I'm talking about has already changed thousands of lives, disrupted an entire industry, and could end up making or costing investors a lot of money. By the end of this video, you'll know exactly why people are watching Opendoor so closely, what's happening inside the company, why the stock is moving the way it is, and whether this is a once-in-a-lifetime chance or a dangerous trap. Let's get into it. Before we continue, this video is for educational purposes only. It is not financial advice. Always do your own research before investing. Opendoor is an American technology company that tries to simplify the buying and selling of homes. Instead of the traditional process, where you hire a realtor, list your home, deal with showings, inspections, negotiations, fees, and weeks or even months of waiting, Opendoor promises something radically different. You go to their website, enter your home details, and within a short time, you get a cash offer. If you like it, Opendoor buys your home, fixes it if needed, and then resells it. It sounds simple, almost too simple, but simplicity is the exact reason the company exploded in popularity. In a country where moving is stressful, selling is complicated, and real estate agents take big commissions, the idea of a fast, hassle-free sale feels like magic. But here's where things get interesting. The iBuying model, where companies buy homes, hold them, repair them, and sell them later, can be incredibly profitable, but also incredibly risky. When home prices rise, iBuyers can make huge gains. When home prices fall or when interest rates rise, making mortgages more expensive, things can get ugly very fast. And Opendoor has had more than one moment where the market turned against them. In recent quarters, Opendoor has seen revenue fall sharply, and the company has reported significant losses. This has caused many investors to panic. They look at the numbers and think, how can a company survive when it loses money buying homes? And that question is fair. Buying physical inventory is risky. Homes are expensive. Market swings hurt. And if demand slows, Opendoor can't just sit on thousands of homes forever. But here's the twist. Some investors believe Opendoor may be entering a new phase, a smarter, more efficient, more technology-driven phase. Instead of relying on massive amounts of inventory, the company may be shifting toward capital-light models, partnerships, and software-based operations. This means Opendoor could reduce risk by using its platform and algorithms to connect buyers and sellers without always owning the homes themselves. Think of it like turning from a house flipper to more of a marketplace powered by data. This shift is one reason some analysts have started to reconsider the stock. They argue that if Opendoor reduces the amount of homes it holds and focuses more on being a tech platform, it could improve margins and become less vulnerable to market downturns. That's a big if, but it's why the stock still gets attention even during rough financial periods. Now, let's talk about the risks, because they're real. Opendoor has lost money many times. It operates in an environment where interest rates, inflation, and housing demand can change overnight. A sudden decline in home prices could hit the company hard. A rise in mortgage rates can reduce buyer demand and slow inventory turnover. And competition from realtors, from marketplaces, from alternative sales platforms is constant. But despite these risks, Opendoor continues to attract customers. Many Americans love the idea of certainty, knowing exactly what price they'll get without waiting, without strangers walking through the house, and without complicated negotiations. Convenience is powerful, and if Opendoor can expand while controlling risk, it could become a major player for decades. Let's think about what this means for investors. The stock has experienced massive volatility. Some investors see the low price as an opportunity, like they're buying a ticket to a possible future where Opendoor becomes the Amazon of real estate. Others think the risks outweigh the rewards and prefer stable, proven companies. Both sides have arguments, But what makes Opendoor unique is that it sits right at the intersection of real estate, technology, data science, and consumer behavior. It's not just a real estate company, it's not just a tech company, it's something in between. And businesses like that often take time to mature. If Opendoor succeeds in scaling and improving its model, the upside could be enormous. If it fails to adjust in time, the downside could be equally large. This dual nature, huge potential, significant danger, is exactly why the stock gets so much attention. Some people believe it could one day reward long-term investors. Others fear it could burn them. Now, imagine the future Opendoor is trying to build. A world where selling your home is as easy as selling your old phone. A world where you don't wait months for buyers, don't deal with broken contracts, don't fix every problem before selling, and don't pay heavy commissions. A world where technology handles pricing, risk assessment, home evaluation, and customer experience. That's the dream. Whether Opendoor can achieve it? That's the question. As for the stock, one thing is certain. It will not move in a straight line. Fast rises, big drops, sudden reversals. These are all part of the journey for companies trying to disrupt massive industries. If you invest in a company like Opendoor, you're not just buying shares. You're buying a belief in the future of real estate technology. And remember, this script is not telling you to buy or sell anything. It's simply explaining the story behind Opendoor, the opportunities, the challenges, and the forces shaping the company's future. Always research carefully, look at financial reports, study market trends, and consider your own risk tolerance before making any decision. If you found this breakdown helpful, stay tuned. There are many more companies, many more opportunities, and many more stories that deserve a closer look. And in the world of investing, understanding the story behind the numbers can make all the difference.